Amazon buying Whole Foods. It's almost a $14 billion deal. We got Shay Wong with the CEO of online discounter Box. All right, Shay, Amazon proves that again. It wants to dominate the world. And groceries, we all buy them, we all use them, but it's been a tough place to conquer for online companies.
Oh, absolutely. I think just because the margins are so thin in fresh groceries, but Amazon's going in, and we were talking about it before, and now we have a company that's not valued on EBIT, but valued on revenue, and so there's big ramifications for the rest of the industry.
What are those ramifications? I mean, you talk about the low margins already.
Yep.
James brings up the point. This is, I think, the 5th largest supermarket chain in the world, so you can't necessarily bust it up based on that. But I think the competitors could push back and ask for some help from regulators saying, hey, these guys are going to destroy what thin margins we have to begin with.
I can definitely see it. I mean, you look at how the market reacted on Friday. Maybe it's an overreaction, but $50 billion of market cap vaporized. Like, I literally was looking at the board at the New York Stock Exchange on Friday, and as it was going down, the only thing I could think in my mind was it was like the last scene in The Rock when Nick Cage was like, vaporize Sean Connery, and I'm like, $50 billion, and so they haven't even gotten started yet. That was just the announcement of the deal.
Right, in fact, I told someone, they said, is this the beginning of the end for the brick and mortars? I said, that might have been a coup de grace right there. I mean, really, the beginning of the end already began, but that might have been the exclamation point or something.
That $50 billion, I know it's kind of an esoteric point, but had they invested that in technology throughout the last 5 to 10 years, they wouldn't be in as difficult a position as they are today.
So for a company like you, because now the focus is now on listen, the other upstarts, the other rivals to Amazon online, does this also force you to consider having a brick and mortar arm or wing, even if it's for distribution?
Well, it's really interesting because since I've been on the show for the last 3-4 years, since we started in my garage, every single question between you and Stu has always been like, when are you going to sell? When are you going to sell? So
I'm not asking you to sell yet, but I am wondering if how this now, because the other part of this narrative is that if they're going to invest in Whole Foods, they don't see brick and mortar going away, just playing a different role.
That's sure true. I mean, at the end of the day, this race that we're running, it's just this mountaintop. Folks are trying to figure out retail. The technology folks are trying to figure out retail faster than the retailers are trying to figure out technology. And right now, Amazon just took a $14 billion shortcut. So all the retailers out there, they're probably looking for shortcuts for themselves.
And so how would that impact you?
Impact.
I mean, you're not publicly traded yet, so we're not going to.
I think I look at it this way, right? I think we've always been a very highly valued asset because of the skill set and the playbook that we bring. We've worked on this playbook for 4 years, moving at the speed of a technology company. If you don't move at that speed and you're starting today, it's going to be a really long race for you to just catch up.
Can the brick and mortars, the pure plays out there, the Walmarts and the Krogers, can they catch up on the tech side? Or they're just at the mercy of evolution?
I think at the end of the day, they're sitting on big cash piles as well, thin margins. But some of these companies have cash to spend, and so they can spend their way into it, but it's going to take drastic action, as you've seen from Walmart.
All right, should any of them call you today?
Phone's in the green room, so not sure yet.
All right, Shay, thanks a lot, buddy.